Yeah. Hello, traders. Tis I, the Rumpled One, coming to you on Wednesday, May the 7th. The year's 2025. Let's talk trading. Do not negotiate with the market with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal's. And once again, make sure you have your risk management in place so you don't lose more than you're willing to lose on any one single trade or during any one single session. Walmal, we were talking earlier about negotiations, and you said you had your scenarios.
Right. Yeah, it's sort of like, the market's going to do what the market's going to do. And you don't know what the market's going to do, but that doesn't give us the excuse to not be ready for whatever the market does. And I had suggested that, maybe sort of like if you do any type of negotiation with in anything, whether you're buying a car or a labor dispute or whatever it may be, you're trying to get a better salary working a job, or you're a salesperson or you're the person doing the buying. You should, before you sit down in the seat, you should have an idea of what are you going to do if A happens or B happens or C happens, and then I kind of relabel that. What's the worst thing? Put yourself in the worst case scenario. What are you going to do in the worst case scenario? And the idea behind that is, let's say you're sitting there, you're negotiating a salary because you're working at a job, and the boss, you sit down wanting to get a raise, and the boss says, well, you really haven't been doing all that well this year. I actually was looking to go and renegotiate your salary and actually cut your salary. Okay, what are you going to do there? You're gonna walk away from the job, or you're going to go and accept it so that you can go and figure out what your next step is, or are you going to say, hey, I really believe in this company and it's got potential, and I'm going to stick it out? Those are possibilities for a worst case scenario. Okay, or what is acceptable? In other words, what's the line that you are willing, that you would say, okay, this is good, but I'm not willing to go and have anything below this line. What are you going to do when you get to a place that's acceptable? You're going to go walk away from it. What are you actually going to do? And of course, the best scenario, you walk into that same office to negotiate with your boss, and you say that you're about to go and say that you want $10,000 more a year. Throwing out there obscene numbers, but let's say that's what you want, and the boss immediately goes and says, hey, what about 15? And you haven't even said the 10 yet. What are you going to do then? You're going to try to get a little bit more, and risk the idea of the boss thinking you're greedy, or you're going to go and accept it, as is, or what are you going to do in the best scenario? And we have to do the same thing with trading, I think. Get into a trade, and I don't care if it's going against you or the trade is going in your favor. You should really have three scenarios out there. What's the worst case thing that you're going to do? What's the acceptable thing to do? And what's the best thing to go and do? And you react to the market based on those scenarios you run out. There's that old expression, I don't know about anybody else out there, but my mama used to go and always say to me, you get what you get and you don't throw a fit, right? I don't know. I don't know if you ever heard that from your parents, but I got that all the time. With you get what you get and you don't throw a fit. Well, that's sort of like market. You get into a trade. Okay, I can't go and move the market one way or the other. Okay, I get into the trade and I get what I get, and I can't throw a fit. The only thing I can do is, okay, if it goes against me, what am I going to do? What's the worst thing that can happen to me? Well, in my scenario, the worst thing that can happen to me is that I go and I get to the point where my deadline, or my drop deadline, is where, losing a maximum amount of money for the day. What am I going to do at that point? Do I immediately get out? Yes, I do. And that is just an unbreakable rule. You just don't break that. Why? Because for people watching the video, way back when I first came on doing videos with TRO, the thing that I used to say all the time: preserve capital at all costs. And that's what causes me to preserve capital. Because if I don't have capital, I can't trade. It takes me out of the business. I'm done. So therefore, that's an unbreakable rule. So in the worst case scenario, that's what's going to happen. At the same time, we always want, I'll go to the other extreme. In the best scenario, I go, let's say right now with market is, I'm not sure what you have up on the screen, but we're right below 60,
Right.
59 or so.
Yeah.
And let's say I wanted to go and take a long here. Okay. Well, actually, let's go and say we want to take a short here. And I go in, and let's hypothetically say that it runs all the way down to 50. I'm now up almost 8-9 pips, right? And it's sort of like, what do I do here? Do I go and take a partial and just, take half my money off the table and put it in the bank and let the rest of it ride? Do I go and, do I go and, leave it all on there and hope that it goes from the 50 down to the 45 or the 40? Why would I do that? Okay, did I look left? Did I go and say, hey, here's a line that I know it's going to have problems with. I'm going to run it down to that line, but if it gets to that line and it starts to falter, I'm just going to get out. Or it runs down to that line and it blasts through it. I'm going to go and stick with it a little bit longer. And have those things in your mind already laid out. And let's say, something where it runs down to the 50 and it comes back to the 55. Well, I'm still up 5 pips. That may be an acceptable thing. So I need to know what I'm going to do when I get to that acceptable point. If it starts running against me, do I just go and take what's acceptable? What are the reasons for taking what's acceptable? Okay, the market did what I expected it to do, but now it's starting to go and have a change of mind of what it's going to do and starts to go in the other direction. Accept what's acceptable, and at least that's what my rule is, just to get clear of it. It's sort of like, earlier, TRO, if you remember, I went into a trade, and the thing ran against me, and I got a second signal. I took a second trade, and then I got out. Why? Because it came back down to essentially to a place where I was at break even, and I wound up losing like a couple points. But that was acceptable to me. Why? Because when I started to look left and I started to look at what was currently happening in the market, to me, it looked like, okay, this is a place where the market potentially can go in my direction. I could make a bunch of pips, but there was just as much chance that it was going to go against me, and then I wound up losing a bunch of pips. So I just said, you know what, this is a place where I can accept getting out and just taking a small loss, and that's just how I play things. It's sort of like, again, it gets back down to that other thing I said in the very beginning, and that is, preserve capital. So I'm preserving capital on that particular deal because I just don't like the way things are looking. And it just, and to me, it's just not worth having that aggravation. Yeah, it probably would go in the direction you thought it was going to go in. But do I want to sit in a trade 15 minutes, half hour? What about 2 or 3 hours sitting there not being able to do anything, and you're stuck and you're at the mercy of the market? You're always at the mercy of the market, but let's be at the mercy of the market where it's acceptable. Just get out and say, you know what, I'm just going to wait for the next opportunity. There's always another opportunity knocking at the door.
Yeah.
You just got to wait for it.
Yeah, it's funny because I placed my cursor at 133, 574, which if you look back 2 30-minute candles ago, there was a let's see, let me get the time here. It was at the 1544 mark. And what's funny is that was a gap up. And so it came within, I don't know, just a couple of points of filling that gap about 6 candles ago. It's just, the whole time you're talking, I'm sitting there watching thinking, Yeah, but you know, right there, watch that sucker inflect. But the reason I say that is because what'll happen is, let's just say you had taken a short and you that's where you put your TP. Well, it got within about a pip and then it reversed about 3 or 4 pips. And what happens, at least in my mind, sometimes it's like, yeah, I maybe I'm up 5 pips now, but I was up 8. I want that money back. And then you start, you know, um, doing that thing where instead of trading the chart, you're trading the emotions because it's like now you might be beating yourself up. Oh, I should have gotten out. I should have gotten out, as opposed to saying, you know what, if it gets to this point and that's acceptable, I'm getting out. Or if it gets to this point and that's a really good um, scenario, I'm getting out. Or it's like, you know what, this is too bad, I'm getting out.
Exactly.
but but it's
Exactly.
almost like it's it's having an if then decision that's already been made in the past while you weren't in the heat of battle versus a seat of the pants decision in the moment.
Yeah, and that's the thing. I was gonna tell you the old expression that your mama may go and say to you, you get what you get, don't throw a fit. Well, the problem is when you don't go and look at life that way, and especially trading that way, what happens is now I'm trading from a position of emotion, and how many decisions are made very well when you're trading from emotion? They're just so. I don't know about you guys, but for me, when I make a decision out of emotion, it seems like I'm wrong more times than I'm right. Why? Because I get so emphatic about things. I don't see all the pieces on the board. I can't see everything that's happening around me. All I see is I get tunnel vision into that one thing that I'm so, lured into.
Yeah.
And that's the problem.
Yeah, and that whole pre-planning, I don't know how many years ago I wrote the exit playbook indicator, where you can tell the indicator in advance, if it gets here, this is what, display a message. This is what you should do.
Right. And here's a little hint of what I do. And for some people, it may make sense. For other people, it won't. What I do is when I lay things out like that, okay, as soon as I get in the trade, or even before I get in the trade, what I'll do is I'll draw a line on a chart. I mean, that's the great thing about MP4. You can draw a line. Literally, you click of a mouse button, right? Draw a line of where those decision points are, so that you're not. For me, I'm a very, very visual type of person. Some people are very number oriented and they can just remember, okay, like yesterday, 86 was the number that you always had to pay attention to, right? Well, for me, it's funny because I drew a line right there. I drew a big solid line there. It actually made it 2 or 3 times fatter than a normal line would be, just because I knew that was an area that was going to be, of contention. Well, what happens if I go away, get myself a cup of coffee, come back a half hour, an hour later, and I don't remember that? I don't remember that specific thing. But now, because that line's there, it forces me to go and say, why did I draw that line on the chart? Is the reason? Oh yeah, that's right. That's because that was a decision point back whenever. And it helps me. Like if I'm in a trade, let's say I run up to that line and I'm in a long, you know, it just tells me, okay, hey, right there, if it has any problems right there, get out immediately. Take the pips off the table.
Exactly. And I'm just sitting here watching price waffle,
Yep.
thinking
I,
there was a red stripe, there was flip flops, and every one of those you would have been uh, just stuck for a little bit. And it's like, and the one thing I noticed, to make pips, sometimes when the market's just moving normal, you might have to be in that trade, 3, 4, 5 minutes, as opposed
oh
to,
yeah.
the 2 minute trades we like. And you know what? Speaking of minutes, the fastest 15 minutes in trading is just about over. So, fellow traders, hope you liked our discussion today. If you have any questions, feel free to leave them in the comments. And always remember and never forget, It's not what you trade, it's how you trade it. So go out there and drain the banks. Rumpled One.